Have you ever seen someone running a marathon? They sprint hard, then they slow down a little to catch their breath and then keep running again. That pause is not the end of the race, it's just a quick recovery before continuing. In trading, that pause has a name, a pullback. So what exactly is a pullback? A pullback is a temporary move against the main trend. In an uptrend, price rises, then pulls back a little, then continues up. In a downtrend, price falls, then pulls back up a little, then keeps falling. Think of it like climbing stairs. You go up those stairs, then step back one to steady yourself, then climb again. Those little backward steps are pullbacks. Why should traders care about pullbacks? Because they give you safer and often better entries into a trend. Imagine you want to buy a stock that's rising. If you jump in at the peak of the candle after a huge move, you might get caught right before a pullback. But if you wait for the pause, the little dip, you can enter at a better price with less risk. Another everyday example. Imagine store discounts. A normal price of a share is 50. It goes on sale for 45. That 5 drop is the pullback. You're still buying into something valuable, but at a better deal. Now, how do you recognize a pullback? Look for 3 things. The first thing is the direction of the trend. You need a clear trend first. The second, an uptrend shows higher highs and higher lows, a downtrend shows lower highs and lower lows. Then, temporary counter move. Price moves briefly against the trend but doesn't break the overall structure. The continuation. After the pullback, price resumes in the direction of the trend. A key point. A pullback is not a reversal. Beginners often confuse the two. A pullback is short, temporary, and stays within the trend structure. A reversal is a full change in direction. The trend ends and flips the other way. Think of it like the weather. A pullback is a cloudy afternoon during summer. You still know it's summer. A reversal is when summer ends and autumn begins. That's the real shift. Traders use different tools to spot or confirm pullbacks. The first one, the trend lines. In an uptrend, pullbacks often touch the trend line before bouncing. Second, moving average. Price might dip back to the moving average and then continue. Third, support and resistance. Pullbacks often pause the all levels before continuing. Fibonacci retracements. Many traders measure pullbacks with Fibonacci ratios like 38.2 or 50%. Now, why do pullbacks happen? Because markets move in waves. No trend goes in a straight line. Buyers and sellers take turns. After a strong push, traders take profits, causing a small move against the trend. New traders then jump in on a dip, pushing price back in the main direction. It's like breathing. You inhale, you exhale, then you inhale again. The inhale is a trend. The exhale is the pullback. Without that rhythm, the market can't move naturally. And here's the simple beginner's approach. Identify the trend. Wait for the pullback to a key level. Trend line, moving average, or support and resistance zones. Look for a small confirmation, like a bounce candle. Enter with your stop loss just beyond the pullback zone. Target the next swing, high or low, in the direction of the trend. So, to recap, a pullback is a temporary move against the trend. It gives you better entries and lower risk than chasing tops or bottoms. It's not a reversal, it's just a pause. Tools like trend lines, moving average, support resistance, and Fibonacci helps us spot them. The psychology is simple. Profit taking, breathing, and preparing for the next push. In short, a pullback is the market's way of catching its breath. If you learn to recognize and respect them, you will stop chasing and start trading with patience and precision.